Congress wants details on how the Bank of America Merrill Lynch deal went down. The House Oversight Committee is going to be asking Bank of America Chief Ken Lewis if the government pressured the banking giant to complete its takeover, despite some reservations over Merrill's deepening losses. Lawmakers released documents yesterday showing that top Fed officials leaned on Lewis to stay the course during this period. In fact, in one email, Richmond Fed President Jeffrey Lacker says, these are his words now, just had a long talk with Ben, meaning Ben Bernanke, of course, says that they think the Mac threat is irrelevant because it's not credible. Also intends to make it even more clear that if they play their card and need assistance, management is gone. Now, when he was talking about the Mac threat, that means the material adverse change clause that sometimes will let companies back out of a deal under certain circumstances. But this is an issue that is still being mulled over today. Here now with the first on CNBC with a preview of today's hearing, Representative Darrell Issa, who is a member of the House Oversight Committee. And Congressman, thank you for joining us today.
Well, thank you, Becky. And now that you've talked about sex and religion, I guess power and politics comes next.
That's right. This is the powerful third leg of all of that. When you start talking about some of these emails that were released, what happened behind the scenes? Ken Lewis has been saying for some time that he was pressured by the Fed, by Treasury. What have you seen with the documents that you've gotten a hold of?
You know, Becky, the documents show us a troubling trend of the use of government power and the threat of actually removing officers, directors, and in this case, the CEO, if, in fact, they don't do what the government wants. And, you know, as Mario was saying earlier, you know, you need to get efficiencies, greater efficiencies in. You get that by finding innovative people who take risks. What we want to make sure today is that if government has tried to mandate decisions, it has nothing to do with whether this was a good deal or a bad deal of Merrill Lynch and B of A. It has everything to do with, are we sending a signal from our government that they will use their power to make the decisions that they think are correct, or are they allowing the market to try to create this constructive chaos to find the best solutions going forward to get us out of a clear meltdown? If the former is true, if this abuse of power is assigned to the market, we have to bring it to a stop, because the latter has to occur. The private sector will get us out of this mess. The public sector cannot micromanage these decisions, and if they see that the public sector is going to do it with public money, then private money will be pushed away.
Although, Congressman Issa, I'm trying to go back to those days when all of this was happening. I mean, the Bank of America decision to go ahead and take over Merrill happened over the course of 48 hours. We're talking about major decisions that were being made every weekend. The Fed and the Treasury were stepping in, and we're trying to help out in a lot of ways to make sure the markets were opening every day. When you try and put things back in that perspective, and it's difficult to do now because we've come so far from it, is there maybe doing what they thought was right at the time?
Well, I think up to a point, Becky, you're absolutely right. Having done, in my small way, a dozen or so acquisitions over the years, I know that you can't do due diligence in a weekend. So we have to appreciate that in this situation, government was coming in and saying, look, we understand you have to do the best you can, but we have to narrow the time frame. That part is okay. It's understood. It was transparent to the American people. However, if, in fact, in the best interest of the company, B of A made a decision that, at least to explore backing out because it wasn't good, government had a choice: sweeten the pot, which they could have done, or stay out of the way and let Merrill go where it needed to go. It's very clear that the government decided, A, they weren't putting money into Merrill Lynch, B, they had made their decision about how much money they were putting in, and C, it appears they were not going to let B of A back out, even if, in fact, it breached Ken Lewis's fiduciary obligation to his stockholders. We're not here to evaluate Ken Lewis and whether he succumbed to that. Right. We're here to see if that pressure was unreasonable and inappropriate to send the signals to the market going forward.
I think the notion of taking a spot fix, like you're looking at, makes sense if you blow it up into a broader context. But the window is broken. From Wall Street, from my point of view, we know it's broken. The question is, how do we fix it and move on, as opposed to worrying about how it was broken? So I just have to be practical about this. A lot of fuss, a lot of, hopefully some good comes out of it.
I just say a little bit to your point is that I think the power to do what has been done, whatever it was, came about because of crisis. And to me, the private market is ending the crisis, and that will also end the ability to do what was done. In other words, the Obama and the Congress administration won't be able to do near the same things that they've been able to do if we're now back growing again and out of crisis. I think maybe some of this will be taken care of by itself.
This is a great point.
I hope you're right, but I think once the camel puts its nose in the tent, you can't get it out.
Yeah, but I don't think, for example, they wouldn't have been able to pass Obama 787 unless you're in the middle of a heated crisis, for example.
Right.
And that would never happen again. And a lot of these programs and suggestions won't be done if we recover.
I'm sorry. What are those things called? Earmarks?
Well,
It's the shock doctrine. Congressman, can you sympathize with those who say that hearings like the one today are a little like trying to second-guess Captain Sully for landing in the Hudson? I mean, he could have landed other places too, but it would not have gone as well.
You know, we've done a lot of gotcha over the years on Capitol Hill. This is not, in my opinion, one. Ed Towns, Elijah Cummings, myself, and the rest of the team, we want to find out about how government intervened and whether or not we should allow Republican, Democratic, or semi-independent entities within government to use their power in the way they did, or whether we need to set clear guidelines that although they can be a facilitator and they can bring, in this case, they had authorization to bring substantial amounts of money to the table, at the end of the day, violating what is, in fact, law of Bank of America was not in bankruptcy. Bank of America was, in fact, making a voluntary and encouraged purchase. Where did the line get crossed, if it got crossed? And I disagree, I think, with the idea that this is past. There will always be another crisis, whether it's September 11th or the meltdown, if you will, the 9/11 economically. There can always be another crisis. We need to make sure the ground rules tell the market that we're going to respect the rule of law. We're going to respect all of the things which business builds its models on. And if it's broken and we say we're going to intervene, we're going to do so very carefully and only within the limits of what Congress has given the administration and the Fed. And that's what Ed Towns and I are looking for. It's very bipartisan. We're not looking to do anything except that narrow question of, can we, in fact, ensure that if there is an abuse, it doesn't happen again?
Congressman, we'll be watching. I appreciate your time this morning in advance of that. Congressman Darrell Issa joining us.